Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Thursday, January 29th. We're going to take a look at the last 2 days of the market action and go around the world in 60 seconds, look at our indicators and some of the key market indicators that we've got. And then we're going to take a look at the 4 biggest percentage movers of the stocks that I'm closely following. All right, let's start off here with the Dow Industrials. It was up 225 points today. So again, a couple big down days. Yesterday was a big down day, maybe not quite as big as the day before. And then we get this big reversal bar, which looks like it's kind of engulfing the body of the previous bar. So we may have a reversal bar, but I don't trust these kind of bars. You see these kind of reversal bars happen from time to time. And sometimes you get a little bounce coming out of them, and sometimes you don't. So we'll have to watch and see what we get out of this one. You know, it did break the support here yesterday, and kind of even pushed a little more to the downside, went to a lower low here. So this bearish count, in which we're working a 4th intermediate wave, which would be down, I don't know where it would stop. But it's what I'm calling a 4th intermediate wave, which it's what I used for the brackets, curved brackets for an intermediate wave. So that would mean we're working, some kind of 1, 2, 3, 4, 5 down for that 4th intermediate wave. And so far, we're kind of playing out that scenario, and we'll see. I need to get rid of that, and then it'll let me get my mouse back. Kind of the little nuances of the system. All right, the S&P 500, though, is showing an uncompleted 5th wave. On the Dow, we show this as maybe the top of the 5th wave, this 5th minor wave. But here we're saying, well, maybe not. And maybe we're working some kind of, we've had 1, 2, and we're working our way up into 3. And so again, what we've got is a lot of sideways whippiness, back and forth, back and forth. Everybody's seeing this. Everybody's dealing with it. Nobody else, I don't think, has any better picture of this. Take a look at the Nasdaq. I mean, look at this. This looks like a sideways symmetrical triangle to me. Now, is that going to pop to the upside? We'll see. There's a very good chance it could. I mean, I'm not saying right now. I think right now the jury's out on this thing. I mean, it's just whipping back and forth, back and forth. New York Composite, same type thing. Now, this is the most bearish. I've talked about this, for weeks now. This is the most bearish count because this did not go to higher highs in here. So this looks like a wave 1 down, a wave 2 back, and that we're working some kind of wave 3 to the downside, but that could all change here if we start blasting up to the top of this trend line and heading higher. So we'll see. We've got a little bit of a reversal bar here on the New York Composite too. Let me take a look at something. I want to look at the Mcclellan Oscillator. I want to make sure it's cycled. The data is see how that changed. The data is the Mcclellan Oscillator used the latest data from the New York Stock Exchange. A lot of times that stuff's not revised until late in the day and early into the evening. And so this looks like the latest count. Again, we haven't broken down. We didn't break this trend line like I thought we might today. And we haven't broken down to below minus 150, which is in the, kind of like the over extreme buy zone that it has a tendency to get into. And we haven't gotten above the 150, kind of sell zone, extreme sell zone that it has a tendency to get into. So we're, again, we're right in the heart of no man's land. So let's see if we can, the next thing we'll take a look at is the Russell 2000 real quick. And again, it's about the same thing, Okay, now let's see if we can go around the world real quick. German DAX, boy, this is over the last week. Look how it's nice trending up in here, pushing higher. We were a little lower than, say 3 days ago, but over the last week, definitely to the high side. Russia Russia's been selling off over the last week and looks like it may be rolling over, although that's hard to tell. You could still make the case that maybe it's some kind of sideways consolidation action, overlapping waves. India is definitely continuing the push. I still don't trust this. This may be, I've got a question mark here, it may be a fourth intermediate wave. It just looks way too shallow for me, which is making me think that something else is going on. I need to revisit this and check the wave count, but right now, I was going to say is the Nifty 50 is continuing to push higher. And the last one we want to take a look at is the Shanghai Composite. And again, this I think is setting up a little bit of an A, B, C. I'm expecting this to come back down. Looks like a flat to me because we got 3 waves here, A, B, and expecting it to come back down. Maybe we come back down to the 55, bottom of the 4th wave kind of thing. All right, that was a minute 15 seconds. All right, a little longer. Let's take a look at short-term trading index. Yesterday we had this extreme close up here, okay? And sometimes you get that extreme close, that's a bottom. Sometimes it's an indication of a new direction pushing off. So we'll see. I mean, it was the highest individual day reading, I think. I did a quick scan back through everything, and it seems like it was since late 2011, after all that government fiasco that was dealt with in August, September 2011. So anyway, we may have a little bit of a short-term bottom that we're dealing with. That may be one indication that's possible. The VIX, you know, this day, what was that, Monday, I remember thinking, wow, this wasn't showing us anything and showing us a lot of fear. Then all of a sudden yesterday, huge big bullish bar to the upside, and thought, wow, here we go, we're going to go. And now we've kind of reversed back down a little bit today. It looks like a reversal bar. But just the way this is acting, I mean, kind of like this little fish hook look, we may get a couple days pop yet. We'll see. There's all these little clues. You're looking for clues all the time. The high-low index is surprising. So here we have the Dow up well over 200 points. And what does the high-low index do is drop back down. Only 86 more new highs than new lows after that move. And yet when we had the big down days, you know, we were getting big chunks of new highs. So it was really kind of confusing data. Now, if it breaks down below this 0, then, you know, I got to, you know, if we get more new lows than new highs, then I've got to start saying, well, things are starting to break down. I mean, that's my inclination anyway. All right, let's take a quick look at the dollar, if I can find it. U.S. dollar index. U.S. dollar index is, again, over, well, last 2 days has been up. It's continuing to trend to the high side, although we're getting a little bit of an M-top kind of action in here. This is not diverging with that move, but we'll see. I mean, it's come a long way in a short period of time, and it's well above that channel, that trend channel. TLT is what I'm looking for. There we go. And again, yesterday, big move to the high side. Interest rates dropping, and you know, the Fed. What's the Fed saying? They're hiking short-term interest rates, possibly in June, is what I'm hearing, and yet we got long-term rates continue to drop. And today we pulled back just a hair, okay? And let's see, I think the other thing I wanted to take a look at is 12-month oil. And this is a good picture because it replicates actual WTI crude oil prices pretty well. We pushed lower today, then came back up here, but continuing to push lower, though it's getting tight. We're getting tight in here. Versus this wide, loose dropping, rapid dropping that you had, a series of rapid droppings. Now, either we're going to break again or we're going to reverse. So we'll see. And then last but not least is GLD, gold. Oh, Spider Gold shares. It always knows where I want to go. It's so funny. Okay, I think we're 1, 2, 3. We're in this third wave up is my perspective on this. I know we got a lot of lines on here. I apologize. Looks a little messy. But again, this green line is a neckline. This looks like a head and shoulders bottom. That projects actually up to 129 is the projection on the Head and Shoulders. Now we've come off, gold was down, I think, over $30 an ounce on the futures market. So we had a big pullback here today. But when you measure from here to here, which is this last big wave, which looked like a third wave, we have retraced just a hair over 38.2%. So given that with this move down here, where we moved up, came back, this retracement was well over 61.8%, a deep retracement. So I was expecting this one to be a little more shallower. So right now, my expectation is that we really don't pull back any lower if we really do have a 1, 2, 3, 4, 5 going on, if this is really a 4. And so what I'm looking for is that this is going to be a 4 right in here, and that we're heading up to the high side. Now, remember, 4 cannot overlap 1. So worst case is I'm not expecting it to go below 118.99, or let's call it 119. So right now I'm looking to see that this thing turns around tomorrow. And that's my perspective on gold. All right, let's jump in and take a look at Alibaba. Alibaba was down 8.8% today. Wow. Okay, so they had their earnings come out, and then there's this whole discussion about, apparently they're taking issue with some report out of the government, so they're knocking heads with the government. There's concerns about, what percent of their, stuff is fraudulent on their trades and things like that. And I saw just a brief interview with, I think it was their CFO or the vice chairman, something like that, out of Hong Kong. And, he was making a pretty good case, putting some good statistics out there and everything else on Alibaba. But, be that as it may, the stock is down dramatically here. And we're back to actually, I think a little less than where it went public. It went public at 90, closed the day at 93.89. So we're below where it came public at on its first day. And the next one we're going to take a look at is VipShop. VipShop is one that I was in with calls, got out yesterday, good thing. Actually it was pushing nicely in the morning. See how it closed? Let me blow this up a little bit more. Okay, see how it closed right here at 23.70, and then it started pushing, and it got up to 24.05, and I actually had a target of like 24. It was the top of the Keltner channel, and top of the Keltner channel for here. I really thought it was going to get there. It looked kind of like in here, where we got to the top of the Keltner channel. And then when it got really close, and then when it reversed all of a sudden, I thought, oh, what is going on? I didn't like it. And as it continued to reverse back down, I said, okay, I'm out of here. And that's when I got out of the calls. And so we still had a nice profit on it, not nearly as much as we had, not nearly as much as I hoped for, but more than what I would have had if I held to today. Okay, now what am I looking at here? It looks like it broke this trend line, like a short-term trend line in here. We'll see if that means anything or not. We've got to close down below the 10. This may be an ABC of some kind. We may be still part of some broader corrective mode. That is the other thing that always is a problem. Once you get into some kind of corrective action, it can morph into continuing corrective mode once you're in that. It's nice when you're in impulsive waves. When you get into these corrective waves, you're never really sure what the heck is going to evolve. All right, the other one related to Alibaba is YHOO, because they're tied together. And YHOO announced their earnings after the market closed on this day, and the market closed here at $47.99. And after the market closed, remember I talked about this in the video the other night, and it pushed up over 51. It looked like it was breaking the trend line, etc., etc. And then it just reversed and had this big, huge reversal bar right back on down. And then the huge gap down today. And here we are down below the Keltner channels and got down to this trend line. So now, I'll be honest with you, this just blew the Elliott wave count right out of the water. And so what I thought was 1, 2, 3, 4, and a 5 heading up to the high side. 4 cannot overlap 1, so this count cannot be right. So now when I look at this, I still look at this and think to myself, coming off of this low point down here, this looks like 1, 2, 3, 4, fifth wave. But it's possible now that maybe the 4, maybe 4 was over here and this was a 1 and had some kind of weird complex, 2, and this was 3, 4, and this was actually 5. I don't know. Enough to look at it closer again. All I can tell you is that this cannot be wave 4 and going higher. Something else is going on. So we'll have to take a look at it, but whatever. The moving averages look like this thing is rolling over. Okay. And the last one we're going to take a look at, and YHOO was down 5.8% today. And then the next big mover was to the upside, United Continental Holdings. Okay, so it was up 3.9% today, and so it's continuing this nice little uptrend here, and continuing to push higher. Of course, the oil prices seem to be helping the airlines pretty well, as you can see from this, nice move up. And so wanted to point that one out. No real perspective. Don't think I have a wave count on this one. No, I don't. But we'll take a look at it one of these days and try to zoom in on that. So, all right, that's it for tonight. This has been Joe for Beyond the Chart. Hey, if you're watching this video anywhere else but my website, head on over there. Check out the posts and the other good stuff. If you're not a subscriber, just click on the red box on the screen and subscribe. And I'll be back on Saturday morning, and we'll have the weekend market wrap. Remember, stay focused, follow your plan, and trade without fear. Have a great Friday, everyone.